Good morning, afternoon, and evening. This is Alexander Elliott. I'm a certified financial and tax advisor, a pro advisor with QuickBooks Online. I'm also CEO of A.W. Elliott and Associates. We are a comprehensive financial and tax advisory firm. We've been around for 30 years. Thank you for attending. This is part 2 of the series, of our tax series for individuals. This is the consequences of your actions or non-actions. The first part we covered record keeping, beginning to pay or ignoring your tax liability, not reporting all your income, fraudulent tax returns, tax evasion. Oh, that's a no-no. Filing extensions, and of course, not hiring a pro when it's appropriate. Okay. But also not responding to IRS notices. That's something you don't want to do. Okay. Anyway, when does the IRS charge penalties? When you failure to file, failure to pay taxes, okay, dishonored checks, or we used to say bounce checks, rubber in it, so return checks. So this is how they calculate the penalties. If you fail to file, it's 5% of the unpaid tax, okay? Minimum penalty is 100% of the tax or $435, okay? Also, if you fail to pay taxes, it's 0.5% to 1% of the amount that's owed, the balance that's owed, and it's a reoccurring charge, meaning it compounds. Well, it may not compound. It's a reoccurring charge every month. Yeah, it's compounded monthly, so that can get pretty expensive if you let it go for like a year, 2 years, and they haven't really came after you yet. They're just sending you notices. That's a lot of money. Okay, add up to a lot of money. Actually, could add up to more than what the tax liability is. Now, if it's a dishonored check or if it's a check that bounced, we all know that. I guess a dishonored check is a nice way to say that. If the payment's more than $1,200, the tax owed is $1,250 or more. It's 2% of the amount of the check. If the check is, or the tax liability is less than $1,250, it'll be $25 or $1,250, whichever is less. Okay, so you don't want them to write a bad check. Matter of fact, you don't really have to do that. You can make payment arrangements as long as you honor that. If you can't keep their arrangements, you call them up. I think nowadays they like to do this automatic deduction out of your checking account. If you can't do that, then they'll work with you as far as sending the payments in. Okay. Also, you may qualify for some relief if you, some relief. So offering compromise is one way. We'll talk about that later. You can make payment arrangements. If it's a hardship, if you really can't afford to make any payments or very little payments at all on the tax liability, they will work with you. If based upon, they'll look at your income, they'll look at your monthly bills, and if that's going to put you in a hardship situation, then you don't have to pay anything. Now, interest and all that will accrue, but if you can't afford it, it's called a hardship. You just claim a hardship, but that is the process. Now, if you disagree with the balance, if you receive a notice, you disagree with the balance, okay, give them a call, have your paperwork together. Remember, we're talking about proper record keeping, because when these things come up, you want to make sure you have your documentation before you call them, okay, because normally they'll let you know why you're getting the notice, and it should be a letter that's showing the adjustment from your original return to what they're adjusting and additional tax liability that is owed. Again, this could be a situation where you want to hire a certified tax professional, okay? Now, you can file a 1040X or amendment return. Let's say you find out there's some deductions you didn't take advantage of, or you didn't report all of your income, because at some point you're going to get a letter, so you can amend your returns. Some things came up that you're like, oh wow, I didn't know I can do this, I didn't know I can do that. Or as far as writing it off, you can amend your return. You can amend your last 3 years return. Again, have good record keeping, because good record keeping or poor record keeping can cost you money. And we talked about fraudulent, frivolous tax returns for tax evasions. It's tax evasion. And just kind of put it in a nutshell. The penalty could be up to 75% of the tax what the tax liability would have been. Okay, plus another $5,000, plus up to 5 years in prison. Okay, so no fraudulent, frivolous tax return. Definitely no tax evasion. Okay. We kind of talked about extensions in the first one. You filed an extension July 2015. Gives you additional time to pay your taxes, not to pay your taxes, but to file your tax return, but does not give you additional time to pay your tax liability. Okay, you don't pay it. It kind of goes back to what we're talking about, the 0.5%, the 1%, everything that we just covered. Okay, so over time, they can cost you a lot of money. So that's part 2. Now, part 3, we're going to go over how to solve some of these issues and things that you can do. Okay, so that's part 3. I want to thank you again for attending. Be safe, wear your mask, social distance. Matter of fact, I just had a neighbor of mine that passed away, and he didn't have any underlying conditions. He was just in his late 50s and in the hospital a couple of weeks and passed away. So be careful out there. Be careful out there. Again, Alexander Elliott. We'll see you soon for part 3 of our series. Have a great day. Thanks.